93% of home buyers think homes today are overpriced. 72% list affordability as the primary concern on why they're not purchasing a home. 64% of home buyers are sitting on the sidelines waiting for the bubble to burst or to get a deal. And if you purchased a home at the height of 2005 and you are still holding on to that home today, that home is worth 143% more than when you bought it. And the chances are you probably only put 3 to 5% down. So we're going to play the what if game today. Like, what if I just wait? What if I continue renting? What if I buy today and home prices go up? What if I buy today and home prices go down? Is the question, what if, keeping you on the sidelines? Like, oh my gosh, home prices are so high today. Interest rates are higher than they've ever been. Would it surprise you to know that the average mortgage interest rate on a 30-year fixed home loan is actually 7%? So we're actually spot on for average. Now, I get the fact that a 7% today feels very different than it did decades ago with home prices as high as they are. But you know what also has gone up? Wages. Okay, so we can afford more. What also has changed is the fact that most couples both work today, that you have dual incomes that are affording that home. Lifestyles have changed dramatically since the last time we saw 7%. I mean, so to say that it's just not like it was might or might not be true, but it doesn't really matter, does it? Because today, what if? So what if I buy today and rates drop? Oh my goodness. So you've just hit the jackpot, because when rates drop, typically home prices go up. Have you seen the limited number of supply of homes today? We continue to be short millions of homes nationwide for the home ownership rate and for the birth rates. We have a massive number, not only of 33-year-olds today, and the average home price of, the average age of a first-time home buyer is 34, but the second largest age group is 21. They want to buy. They want a part of the American dream. They want a part of wealth development and financial stability and security. They get it, and they're going to continue to purchase homes in addition to institutions and homes built for rent. So the idea that we're going to have more supply than we do demand is decades away. So for right now, if you purchase today and you get the benefit of interest rates dropping in the future, then you get the opportunity to refinance, and you're on this side of home prices going up, because home prices go up when interest rates drop. Because remember the 64% of home buyers who are sitting on the market? Yeah, they're waiting for interest rates to drop. They're all going to come into the market and rise home prices. You, my friend, are the winner because you get to refinance. And the Rueth team is offering you a no lender cost refinance. We're paying all of the appraisal fees. We're paying the lender fees. We're paying the credit report fees. We're saving you thousands of dollars by allowing you to buy now and refinance when rates go down. So what if I buy now and the value of the home actually goes down? Now, I can't say that that option is completely off the table. It's a very low probability, but it is not completely off the table. There are neighborhoods that might have gone up higher than they should have and are now resetting back to what they should have been based on normal market conditions. But they didn't have normal market conditions. None of us had normal market conditions in the last 3 years. So some of those home prices might have been a little bit more elevated than we expected. And that could happen. But do you remember one of the factors that I gave you right coming out of the gate? 143%. And that's in the Denver market. 143%. If you bought at the height of the market in 2005 and you rode the wave down and you rode the wave up and you just held on, because you bought the appropriate priced home for your budget, then that home today is worth 143% of what you bought it. Now, if you had renters in that home and you bought more than one, say you bought 2 or 3 or 5, and you had 5 homes that were worth 143% more than when you bought them, how are you feeling today? Real estate is not short term. Real estate is long term. So let's go to the next question. What if I buy today and there are costly issues with the home? Do you know that there's a large percentage of people who overbought during the pandemic years, and they bought what they would have considered fixer-uppers? Maybe it needed work. We had a lot of sellers during the pandemic years that were selling things that in today's market might not sell so easily, but they were selling easily because there weren't enough homes to purchase at the very low interest rates that were artificially kept low for longer than it should have been. So there are people that wish they hadn't bought during the pandemic years for maybe $50,000 or $100,000 over asking, that they bought it as is. They waived inspection, they waived appraisal. They might be rethinking their decision. But I would tell you this, if you bought today and that home has repair issues down the road, then where do you stand? You need to buy smart. Today, most people are buying because they need to. Interest rates are 7%. I get it, right? They're buying because they're getting divorced, they're getting married, they just graduated, they got a job transfer, there's a death in the family, any number of things that are causing people to purchase homes today. If you're buying something and you're buying as a fixer-upper, you better have reserves on hand. Or consider a renovation loan, which we're doing a lot of, to keep more money in your pocket and roll in those renovations. If you're buying something as is, or maybe it's you've got a couple of bids that you're going up against and you're willing to waive inspection, I wouldn't. I wouldn't. And if you do, then you need to make sure that you do have reserves set aside. Today is the time to buy within your budget. Capitalize on the equity that you might have in other properties to do a home equity line of credit, or down the road you can do a refinance to pull some of that equity out when interest rates do drop and home values go up, to fix up that home then. Is it livable today? Is it just maybe not the perfect home for you that you want to do some renovations? But I would say I would ask a lot of questions, and I would not waive inspection, not in today's market. What if I buy now and I lose my job? We're still seeing initial jobless claims stay consistent. It's not going up, but it's staying consistent. So we're hearing of layoffs. We know the economy is resilient, yet we're still seeing some companies right-sizing. So what if you are at risk of losing your job? Plan ahead. There's nothing worse than putting yourself in a position of undue stress and the risk of homelessness. And that's whether you rent or own. So buy within your budget. Make sure that you're asking a lot of questions of your lender. Just because you qualify for up here doesn't mean you should buy that. Maybe you need to buy here because you should have 6 months in reserves. Maybe you're buying with 2 incomes, but you're only qualifying on 1. Or maybe you know that you're about to get a raise or a bonus or something that's going to put you in the position. But do not put yourself in a position of risk if you think you're at risk of losing your job. And if that does happen, then reach out to the lender. If you bought a home and you do lose your job, reach out to the lender and ask about a loan modification. They are still available, and the lenders oftentimes want to work with you. Lenders don't want to be homeowners. That's your job. The best opportunities today is if home prices continue to go up as they have been. If interest rates at some point start to moderate down to 5.5 or even 5.25, and we see home prices even escalate further than that, to be on this side of that opportunity for appreciation and to take advantage of a refinance with no lender costs is only a win-win. But worst case, long term, the Denver market continues to appreciate. Long term, you'll continue to have opportunities for rental income. Long term, you can always rent out a room, build an ADU in the backyard, or a mother-in-law suite in the basement. Home ownership gives you options. The what if game, keeping you in a rental, is pinning your options to a very small number of 0. Well, that's a wrap. This is Nicole Rueth with the Rueth team. Hope you guys are having a fantastic day. Get off the fence. Give me a call. We would love to go to work for you. Take care.